What we've seen in recent months is this trend actually suggesting a topping in the auto sales environment broadly. Cars under a tremendous amount of pressure. We're seeing that pressure bleed into smaller crossover utilities. And when you add on to that, and we do a lot of proprietary consumer survey work just on this very topic, we're seeing a substitution away from new vehicles to late model used vehicles. So what we're really watching is, as SUVs come back to market off lease and they're 20 to 25% less than the brand new vehicle counterpart, are consumers opting for that value option and a just as good as new vehicle? That's been a key trend, and we think that bleeds into 2019 in a major way. So we're looking for stocks that have more exposure to the used vehicle side, quite frankly, than the new vehicle sales side.
Jamie, clearly the U.S. consumer's pretty strong. Everyone's reporting that. On the flip side, interest rates are going up. What portion of these sales at the moment are finance sales as opposed to outright purchases? And have rates gone up significantly in the last 6 to 12 months as the Fed has hiked rates?
Yeah, it's a great question. It's a key point. It's an auto credit, auto finance driven purchase for roughly 90, in some cases 95% of consumers are bringing some form of financing to bear with a new or used vehicle purchase. Leasing is a little bit of a lower percentage. It's closer to sort of 30 or so percent of total transactions. But what we're seeing is, there's some wiggle room with respect to a 1% move in rates for an auto loan really only amounts to maybe $15 to $30, give or take, on a monthly payment. So will they not option that additional premium package or what have you, I think is the offset for right now.
In the final time, Jamie, the stocks have done well. I mean, over the last month, the market has gotten hammered, and the auto sector is up 10%.
Sure.
Looking back over 1 month, still down 20% for the year. Where's the buying coming from, and what's the thesis?
Yeah, look, I think there's some scarcity value in terms of high growth stories like a Tesla, which is extraordinarily volatile and it's a fun one to cover for sure. But EVs are growing massively over the next 5 to 7 years in terms of penetration of the market. That's a high growth story. On the used vehicle side, Carvana has broken through now and is basically a nationwide presence in online only vehicle sales. So there's some scarcity value, if you will, high growth stories on the used retail side. And we look at some suppliers that are, if you will, poised or maybe able to sort of leverage into technology around autonomous vehicles over time. We like Visteon in that case. Get a lot of questions on Aptiv and others. But I think you can find your pockets in terms of secular tailwinds going into next decade, and that's where people are most focused.